Hi, good morning. Nice to have all of you here on a brand new week. And what a weekend it was. You had the Alaska meeting with Trump and Putin. And as one commentator mentioned, Alaska turned out to be Alas. And what happened is that suddenly India got a reprieve. The third party tariffs would not apply. And Trump suddenly said that we go back to a peace deal and not a ceasefire deal. The gambit that Europe and Ukraine were hoping for did not work. Let's see what happens now. But even otherwise, there are other headlines that have come up which are quite interesting. One of the biggest one being GST. But before I go ahead and talk about what stories you're doing, let me introduce my co-anchors. My co-anchors are Katya. Katya, come in. And good to have you here. And then we have Hussaina there. Welcome, Hussaina. And then we have Aparna. Aparna, welcome. The three of us are going to discuss some very interesting titles, and the titles are given on the screen. The first one is on GST, the biggest development that everyone's talking about. The second one is basically on how India Inc. is sputtering. The fantastic growth that was expected did not materialize. And the third is ICICI's Gambit and how it could change the way banking works, at least for some banks. Let's go to the first story, which is very important, and that's GST. Katya, could we have you?
Sorry, sir. So it's basically, it's been 8 years since GST has come in, and now they're rationalizing it from 4 slabs into 2 slabs. Not only will it, ease disputes, because there's a lot of confusion on why something is 5%, 12%, 18%, etc. 12 and 28% are going away, which means a lot of them in 28 might come to 12, a lot of them in 12 might go to 15. So basically, it's reduced GST burden, something what everybody has been asking. So, and this is very important to boost the consumption story. So, apart from the income tax relief that was given earlier in the budget, and apart from the merge liquidity that was released into the system by RBI, this is going to GST is actually been a pain point for several consumers, because it's an indirect tax. So, anyway, just want to add that the 40% for sin goods will continue, and they're going to be taxed heavily. So but this time they are also come up with a classification of aspirational goods. Why are aspirational goods important? So basically, earlier TVs, refrigerators, ACs, etc. were seen as luxury goods, but they are not luxurious. They're just aspirational, and they need to have a decent GST for people to be able to afford them and enjoy them, because they're becoming a necessity in this day and age. So, what do you think, sir? It's going to boost consumption, or will salaries and jobs continue to bother people?
Well, it is going to boost salaries. In fact, some sectors like the automobile sector and the white goods sector are hoping for better sales because the prices will come down. The trick will be whether the lower prices attract more consumers, because many consumers have lost their jobs.
Right.
And job increases and the salary increases have not been commensurate with what their expectations are. So with nervousness and skittishness around, will they save the money or will they go in for goods? They've seen people have taken EMI loans, etc., getting into big trouble. And everyone's watching. So in spite of the RBI reducing rates, in spite of everything, GST reduction, the streamlining is a very good move, both for India and for the consumers and for the producers, and even for good politics. Elections are around the corner. But will it work right now? I don't know. Let's see. And that takes me to the next story. We'll take an Aparna now. And Aparna is going to discuss a very interesting subject of corporate profits.
So, India INC June quarter numbers are finally out, and the message is quite clear. Yes, companies managed to hold on to their profits, but the real conviction of for growth was just there. This earnings season felt like a roller coaster, starting off weak, showing small flashes of hope here and there, but ending with smaller firms dragging the mood down again. Now, here's the interesting part. Revenue contractions, which were a big concern earlier, did ease a bit. More companies were able to manage steady numbers, but when you look closely, the recovery still felt fragile. The gains were modest, and the momentum that usually signals a stronger economic revival just didn't show up. If we break it down based on data from over 4,000 companies, revenue growth stayed soft, especially when you exclude the banking and the financial sector. Net profit numbers were mixed too. Some quarters in the past year had shown strong profit growth, but quarter one of FY26 couldn't really carry that energy forward. And that's the big story here. Profits are holding up, but they aren't sparking the kind of confidence businesses need to expand, invest, and really push growth ahead. It's almost like the corporate sector is playing it safe, waiting to see where the economy is headed instead of taking bold steps forward. In short, India INC has stability for now, but for the so called animal spirits that have driven the hunger for expansion are still missing. So, sir, this is my story. What are your insights about it? What do you think, sir?
You're right. It's a very, very interesting story. And whether GST itself will increase profits of corporates because of stoking consumer demand, the I think the real problem will be rural purchasing power, which still languishes because of government's not so agriculture friendly policies. And the second part is that it's not allowed new investments to come in. So, till those happen and new jobs are created, purchasing power may not increase, and corporates may want to make profits but may be helpless in this matter. But yes, a very important story. I'm glad you raised it. I'm glad you brought it to the notice of everyone. And that takes us third story. And the third story is a review of an item that we did just recently on ICICI Bank. Hussaina, could we have you?
So essentially, ICICI Bank recently raised the minimum average balance for savings account, especially in semi-urban and rural branches. Now, customers must maintain rupees 50,000 and or else face penalties. Earlier, this was rupees 10,000. So, monthly average balance essentially refers to the average closing balance maintained in a bank account over the course of a month. So, it is calculated by adding up the closing balance of each day of the month and then dividing the total by the number of days in that month. So, for instance, if the monthly average balance requirement is rupees 10,000, it does not necessarily mean that you need to have rupees 10,000 each day in your account. But ICICI moves is gaining widespread attention. From August 1, 2025, the requirements are as follows. For metro and urban branches, rupees 50,000. For semi-urban branches, rupees 25,000, and for rural branches, rupees 10,000. Now, over the past few years, leading banks have seen a steady decline in low-cost deposits, what we call as CASA or current account savings account. CASA is a cheap capital for banks, but as people chase better returns in mutual funds or fixed deposits, CASA ratios are slowly slipping, and this is what putting pressure on banks' margins. And as for ICICI, even though it's one of India's top private lenders, the bank's net interest margin, which let me tell you is the core profitability indicator, fell in financial year 2023, reversing an earlier uptrend. And that is the very reason that in order to stay competitive, ICICI is now nudging customers to maintain higher balances or else pay a penalty. But here's the catch, it's not just ICICI alone. Data shows that public sector banks collected over rupees 800 crore in penalties for balance shortfalls. And this is clearly an industry wide strategy. And at the same time, banks are lowering interest rates on savings, making it even harder for depositors to grow their money passively. Zooming out, this trend hits urban and metro customers harder, especially since over half of ICICI branches are in urban areas. With inflation rising and real income stagnant, this hike can feel like a quite burden on everyday banking. In a nutshell, sir, at this point, I think that minimum balance is gaining traction as a revenue model. Uh, That's it. But what do you think, sir? Do you think that this move by ICICI and a lot of other banks is kind of shunning the masses and it's just betting on the rich?
Well, as you rightly mentioned, Hosseina, uh, low cost deposit and minimum balance and penalties for not maintaining minimum balance is also a big revenue earner for banks. But the big revenues are being earned by public sector banks and not by the private sector banks and not by the foreign banks. They have made sure that their customers remain above the minimum balance. And with ICICI pushing the minimum balance to 50,000, they want a cream of customers so that possibly they can offer better service. And the game will now become, for better service offered by some banks, prime depositors from other banks will quickly move away and come to ICICI. So ICICI has a double benefit of not having the costs of maintaining low deposit accounts, at the same time generating more money because good depositors will come to ICICI. Very clever move, and let's see how the market turns out in the near future. Of course, banks that depend on low volume depositors, are a bit upset, but that's expected. That's competition. Anyway, thank you very much, Hosseina. Good story. And now let's go to the first question that come in. Before the questions and comments that I take up, just a reminder, please click the subscribe button if you're not a subscriber already. Do click the like button. It helps us in our algorithms with YouTube. And most important of all, please tell all your friends about us. It helps us grow faster. And that takes me to the questions. And we are, in a way, tight on time. So let me see if I can take one or two questions. The first one, of course, is will the GST policy help revive the economy? Katya, would you like to answer that?
So it's a Diwali gift, sir. It's been very clear. So, like sir said, auto sales are falling, white goods sales are falling, apparel sales have been falling, and people have been complaining about GST. So, even though there might be some revenue hit because of this GST, it's going to help the economy. Also, because when exports have become uncertain, we don't know where the tariff hit will go. So, we should build our own India story, and this is not a bad move at all to do it.
Absolutely. And India is a consumption story, largely.
Large.
And instead of wasting too much of time on exports, just make the consumption story stronger and it'll help India enormously.
Right.
Thanks. Good. Let's take the second story. And the second story is, do you think corporate profits will bounce back? Well, it all depends on many factors. And many of those factors depend on government policy. Can the government encourage more investments and create new investments, new jobs, and thus new purchasers? Can the government also create an environment where investors feel happy? I don't know. So, GST is one part. The second part, as the next question was on how do we look at the will corporate profits bounce back? It's mixed up.
Right.
Thanks. Let's take the question on the story that about ICICI. Will ICICI persuade other banks also to go up? Depends. It depends how banks see their strategy. A public sector bank will make more money from the penalties on small deposits, on not meeting minimum balance. So they may stick to small depositors and also minimum balance, which is 500, 1,000, 10,000. Each bank will decide its own cutoff. But the big banks may move towards ICICI strategy of maintaining a minimum balance, which is well over 20,000, 25,000. ICICI has pegged it at 50,000. Will others go beyond it? I don't know. But very interesting. And that, in a way, takes us to the end of today's session. As I said, this is the beginning of the week. Have a lovely week ahead. As for today, may you be profitable, may you be happy, and may the day go well. Take care. See you tomorrow once again at 8:15 in the morning. Good luck.